I'm Scott.
I'm Bill.
And we're the Trade Guys.
You're listening to The Trade Guys, a podcast produced by CSIS where we talk about trade in terms that everyone can understand. I'm H. Andrew Schwartz, and I'm here with Scott Miller and Bill Reinsch, the CSIS Trade Guys. Coming up next on The Trade Guys, we'll talk trade whiplash. Plus, we'll talk about the bond market and is China and the United States finally and for good decoupling? All on the next episode of The Trade Guys. Welcome back to The Trade Guys. This is about 3 of these in the span of a week. 2 on this work week already because we've got some emergencies going on in tariffs, boys. And I am so happy to be here with Bill Reinsch and Scott Miller, as always. We also have Phil Luck, who is our chief economist here at CSIS. Scholl Chair took over for Bill. Phil, it's great to have you on the podcast. This is the first one that I've had you on, so we're super happy you've joined the Trade Guys. But guys, we got to talk about what's going on. What on earth caused the pause for 90 days in President Trump's reciprocal tariffs?
You know, I came home last night, and the first thing my wife said, she looked at me and said, well, he folded. And I think that sums it up.
And wait, Bill, did you then say, I told you so?
I did not. You don't say.
You only say that to me and Scott.
I do, but I'm not married to you and Scott. You don't say it to your wife.
Right.
Good judgment there.
Good
Bill.
Strategy. Thank you. But the bond market, I think, did him in. And my colleagues will explain why that matters in a moment. But I think what is depressing about it, in a way, it made things worse because what he's basically done is told the world that we're not reliable anymore and that we're not a reliable partner. And that is going to cause them to turn away from us. That's already happening. Other countries are, teasing out other trade relationships. And I think we closed on this last time. And part of it is it's kind of heartwarming in a way because what some of them are doing is let's have free trade agreements.
Yeah.
Not with us, but with other people.
Well, that's sort of the problem.
Yeah, because we're going to be just watching. And in the end, there's going to be, the trade world that's growing through greater integration. And then there's going to be the United States. But, if it's self-defeating for Trump because if I were going to invest, why in the world would I do that now? I have no idea what's going to happen. Do we have 90 days of 10% tariffs? What if he changes his mind next week?
You mean if you're a company, why would you invest in America? Yes,
foreign or even American thinking about expanding, they're all going to hold on to their wallets. And why not? The bond market continues to tank. So next week, what's he going to do? Or it doesn't. Everything goes back to where it was 2 weeks ago. Then what does he do then? Put the tariffs back on? There is no certainty. The guy is textbook definition of arbitrary and capricious. And in that situation, I think you're going to find investors saying, wait a minute, let's wait for the dust to settle, even if that's 6 months. And I'm just not going to make any rapid decisions. So it's putting us farther away from his own goals. If it's assuming his goal is to bring manufacturing in the United States, I just don't see people being excited about doing that right now.
Okay, so I want to ask Phil, before we talk about the bond market issue and before we talk about what the 10% remaining tariffs across the board and the massive tariffs on China mean, I want to ask you, Bill talked about that companies aren't going to want to invest in the United States, which is a huge problem. What about individual investors investing in our stock market? We're seeing today precipitous drop in our markets again.
Yeah, I mean, the market is up and down and more down than up, obviously. I mean, I think so. It's obviously going to reduce the attractiveness of the U.S. market. I mean, again, one of the huge ironies of all this is if Trump had kind of done nothing in the second term and just kind of golfed and talked about deregulation, he probably would have, had a humming economy for all 4 years. Like everything was going great. I mean,
let's not forget we were growing at 3% when he took over.
Absolutely, right. And then just the animal spirits of people thinking that things are going to go better under a more business friendly administration probably would have added a point to that. So no, it's absolutely going to be a problem. I mean, to Bill's point, people who are investing, if they're investing in the United States, they're going to be doing something that's, highly, just for the U.S. market and probably sourcing, in ways that are higher cost, just to be more insulated. To add to what Bill said, I think what's interesting here too, and this kind of brings us back to the bond market, is absolutely Trump has shown himself to be capricious and creating a lot of uncertainty himself. But he's now created a layer of uncertainty that he can't control. He can control his behavior, but he can't control the bond market. He can't control PRC retaliation, right? So now, even if investors think that he might wisen up, that doesn't give you enough, right? If you're a business and you need to worry about long-term interest rates because you need to make investments, you need to know what's going to happen to the 10-year yield. So this level of macro uncertainty on top of the policy uncertainty is what, as Bill said, going to make people hold on to their wallets, consumers and businesses, and that's the perfect recipe for a good old-fashioned recession.
All right, Scott, tell us what the heck is going on with the bond market. What does it mean, and why did it sort of unravel the president and his advisors in the last day or so?
Well, look, I want to first start by quoting the great James Carville. About the time he was leaving Bill Clinton's service, he was first a campaign manager and then an advisor. And Carville had a way with words, but he once said, look, when I was a kid, I wanted to be reincarnated as the Pope or a 400 hitter in the big leagues. And he said, now that I've been around this government, I want to be reincarnated as the bond market because that's where the real power is. And so, very true, given the size of our debt and the amount of reliance there is worldwide on the U.S. dollar, U.S. debt instruments to manage the global economy, the bond market's highly important in particular. And this is comments that President Trump's Treasury Secretary, Scott Bessent, has said repeatedly. His measure is the 10-year Treasury. Okay, the 10-year Treasury is important because that's the key indicator of sort of long-term government, what government has to pay to finance. But it also is a measure of expectations on the part of investors on the total U.S. economy. It happens to be used as the sort of the risk-free rate for mortgage loans. So if you're in the mortgage loan business, the risk-free rate is whatever the 10-year Treasury is, and then you add the risks back in, the borrower's FICO score and all the other factors. But it's a very important rate structurally from that standpoint. But what are really 10-year Treasuries are held worldwide to manage economies and manage other countries' currencies. So one of the reasons for the sell-off was in Japan trying to manage their currencies. They're the largest holder outside the United States of 10-year Treasuries. So those become structurally important to macro finance and therefore the stability of the global economy. And so this is why I think the Treasury Secretary was so influential at getting the pause. I think that's why he and Ambassador Greer, USTR Greer, are on point for the Japan negotiations. But it's a big factor, and I think it's a bigger and more important factor because what you have are all the Wall Street people who are part of the Trump administration look at our macro finance situation and they see insolvency unless we start doing the right things in terms of economic growth and spending reduction and all the things that they're trying to put together in advance.
These are the same people who are talking about a pretty significant tax cut, though, also.
Well, yes, and that's part of the package. So, for me, I'm inclined to be patient for two reasons. First, there is a bigger package. There are lower taxes. There is less regulation. There will be other kinds of assurances about investing in the U.S. market and growing the U.S. market. I don't know if you saw the headline inflation numbers out today. They're very attractive. So even lower rates could be on their way for the domestic Federal Reserve Board rates. So that's the first thing. There's a bigger package than just tariffs. The second thing is, I think we're evaluating President Trump as if he's a normal politician that, tries to hedge between two different pressure groups or tries to kick the can down the road. This guy he's here to do something very different. He didn't run for president to kick the can down the road. He's willing to takes all this. Plus, he's a little like Andrew. You remember the jazz scene in New Orleans? He's like a jazz musician, but all the music critics are classical music experts, and they don't really get what he's doing. My sense is he probably knows where he's going, just like John Coltrane knew where he was going on one of those long riffs. Okay, but he doesn't say it because he's waiting for responses, and he seems very comfortable in this, where everybody else is losing their minds.
All right, so Scott, Bill's about to throw a fit that you've compared President Trump to John Coltrane, but I'll let Bill do the honors.
It's really any jazz musician being evaluated by a musician from another genre.
No, point taken.
That's the catch.
Point taken.
Okay.
Bill, what the heck here?
Well, I'm speechless.
This is great.
I'm just saying there's a different way to look at it.
Well, yeah, but there's the sane way to look at it, then there's the the insane way to look at it, Scott. One of the criticisms of what's been going on, which I think is a valid one, is that nobody has ever been able to figure out what the actual objective is. Is the objective to basically get revenge against all the people he thinks has been taking advantage of us forever? In that case, you want the tariffs to stick. On the other hand, is the point to get them to get rid of their barriers through negotiation, which seems to be what he's been saying the last couple of days.
And what Scott Bessent said, and also what Peter Navarro said, is that this is going exactly as they planned. Trump put through some water on that when he said people got the yips, but okay.
Well, exactly. Keep in mind that Trump has contradicted every one of them except for Greer, and that's because Greer hasn't said anything.
That's because Greer was up on the Hill and didn't even know it had happened.
Yeah, I was just getting a report about that. Yes. Apparently, it happened while he was testifying, and somebody asked him, "Did you know about this?"
Yeah, I feel bad for the guy because he was up there, naked in front of the Senate, or in that case, I think it was the House, and he literally didn't have all the details.
Go back to what the plan is here. If the plan is to negotiate to get rid of barriers, then there's not going to be much tariff revenue. If the plan is to raise money in order to pay for the tax cuts, which that won't do, but if that's the plan, then you want to keep the tariffs, which is contrary to what he's been saying about negotiation. If the plan is to bring manufacturing back here, then you want to keep the tariffs, because if you're going to get rid of the tariffs, there's no point in coming here. So what is it? What is he trying to accomplish? He's been all over the map.
All right. Well, Scott's been patient with you, Bill, as he always is. So Scott, you were making the point that patience is crucial here. You were also saying there's been a bond sell-off. But
it's all what you've set up is the first broad-based tariff reduction negotiation since the Doha round collapsed at the start of the global financial crisis. Okay, that's 15 years. We could use some tariff reductions. So there's an opportunity here to lower tariffs, okay, and get rid of what the president characterizes as unfairness. What he's sending, the reason he's doing what he's doing is, as best I can tell, is he wants to send the message that this is a serious venture. China is the most serious. I mean, it's clear we're getting a divorce from China. All right, the plan is to decouple. It's going to be messy, but they're willing to deal with that messiness. The 10% tariffs was sort of an equalization and a beginning, kind of a down payment, and we'll see what deals they negotiate. For me, that's what can emerge in the next 90 days. Yeah, I know it's a mess right at the moment. All right. But for some reason, these kinds of messes, this is where the president seems to do his best work. This is where the Abraham Accords came from. This is where someone in this, you look at his first term on the things where he was unconventional. He was unconventional in ways that wound up being pretty useful. And so I'm inclined to give him the 90 days. Look, if you invest in equities, you ought to expect volatility. All right. And so the lows of the Dow Jones Industrial Average are all the way down to what they were in 2024. Okay. It's a large correction, but it's a correction. And the market will find its footing as it always does. A bull market has a 10% correction at least once a year. All right. But if that's too much for you as an equity investor, look, buy savings bonds. Okay. Open a passport savings account. Stay out of the markets. In any case, I do think that we ought to give them the latitude to engage in let's see where the marketing goes.
Okay, so the president's got to negotiate over the next 90 days with what he says 75 countries. The Journal says 57 countries. I'm not sure what it is, but basically President Trump is saying all of these countries have been ripping us off. But in the last week, isn't it the American people that have been ripped off?
I would say that, and I would also say on China, it's not a divorce; it's a murder-suicide pact, and I mean, it just doesn't.
Wow.
It just doesn't make any sense to me. To me, the fundamental problem, Scott says they're going to buy people are going to buy treasuries. I'm not so sure that's right, and that's what's so worrisome about this. What you're seeing, I think, is a decline in confidence in the dollar, a decline in confidence in the U.S. currency as a safe haven. And if that persists,
that's the key.
Then we're in deep trouble.
If it persists, and that's important. Because this is a negotiation, okay? They're going to be bargaining. This is what this guy does.
But we're not negotiating with the bond market.
No. But we are. He wants to revamp our trade relations with the world. All right, and he's going to do it his way. All right. If it's a bad way, then it's all going to crumble. The Congress is going to withdraw the authority, and we'll wind up back to the status quo.
Well, what's interesting is I don't know how much longer President Trump is going to like being referred to as Herbert Hoover. Phil, what do you make of what we're talking about here?
It's got fault, that's for sure.
Probably better than Warren Harding. Look at it that way.
Yeah, well, we're not picking from a great class, I guess. But no, I appreciate your optimism, Scott. But I mean, the first thing I'll note is the only thing we've done so far is increase tariffs, right? 10% across the board is quite high. So we got to go down quite a bit just to get back to the status quo. And even as we saw with the Biden administration, it's not that easy to unwind trade wars once they started.
Right.
Nobody wants to unilaterally disarm. So you have to have.
Guys always say you can't flip the switch on and off so easily.
And you can lose control of the outcomes. Yeah.
And the other thing I would say here too is that we've been in this paradigm for months now because of Canada and Mexico. But Canadian officials have been telling us for a while. They're saying, "Okay, great, you want to sign a new trade agreement or you want some new pact. You're showing us right now that the one we got's not worth the paper it's written on. So what's the point of a new agreement, right? Agreements are only as good as your word, and that's been proven to be basically worthless right now."
Exactly. So, why would anybody believe him?
Right. Exactly.
Well, I mean, that's a good question. That's the question they're asking on CNBC. That's the question they're asking in the Wall Street Journal. On Bloomberg, they're all saying, why is anybody going to invest in the United States? Why is anybody going to believe that they can negotiate with President Trump in good faith? And part of that is that, as you said before, Scott, Bessent and Lutnick are going to be handling a lot of the negotiations. Sometimes countries have been saying, well, if I negotiate with the cabinet secretary, does that mean that the boss actually signs off on it? Phil, what are you hearing about that?
Yeah, I think to the earlier conversation about Jameson being caught in a very difficult spot the other day. I mean, look, that's the USTR. That's the person who should be, running the show here in main ways. And that's
as the House members kindly reminded him during the hearing.
Exactly, right. And so, look, we have this completely top-down approach from someone who genuinely seems to just not understand how trade works. And so that's not super helpful. The other thing I would note really quickly is, there's two things that I'd note. On the PRC side, I mean, Scott, I agree with you that we're being like, I hope we're not heading towards a divorce, because I think that is just, it's underappreciated how just monumentally impactful to the global economy that would be, and basically impossible. I mean, these global supply chains are such that,
Right.
the spat we're having with Vietnam is basically the indication of the fact that it's basically impossible to decouple entirely. And so if you do that, you basically either have to have convinced almost most countries in the world to side with you over the PRC, which you're not giving a lot of countries good reasons to do that right now, or you're going to have to isolate yourself from everybody but a very small group of countries, and that's a recipe for essentially isolationism. The other thing I would note is, the PRC is retaliating with pretty high tariffs. They're also, shooting some more shots across the bow on export controls, right? They listed a bunch more entities and firms in the U.S. They've notably said that they're going to increase both multilateral and bilateral negotiations on export controls. So they're trying to extraterritorialize their programs. They're not standing pat, right? We're gonna, we're in a trade war with China, but we're also going to be distracted by negotiations with 75 other countries. They can kind of just focus on us. So, I'm not sure I would bet on our crew, even if it was both sides, putting all their attention on the other. But we're going to be spread thin.
Let's talk a little bit more about China, guys, because, one of the things that has been true is that over the past 5 decades, business has underpinned the relationship between Beijing and Washington. Without it, what happens?
Well, in the short run, it's going to be a disaster because China remains deeply integrated into American supply chains. I mean, there's been a lot of de-risking.
Yes.
But we're still buying, $450 billion worth of stuff from them every year, which is a lot of stuff. And the latest estimate I saw is that the tariff levels that are now in place is going to reduce our imports from China by 82%. In the short run, that's going to produce big shocks, shortages. Eventually, there's a new equilibrium. Companies, switch their supply chains around. They come up with alternatives from lower tariff entities, but that takes time. And meanwhile, the tariffs are in effect, and it's just going to be, I think, a nightmare. I talked to one of our colleagues here at CSIS who follows the Chinese economy, and we sort of agreed, I think both sides want a deal. We both, I think, agreed that think of it kind of like a sumo wrestling match. And you got these two giant 600-pound people. And, if you ever watched a sumo match, there's a lot of foot stomping and grimacing and throwing of rice around. And eventually they belly bump and something happens. Nobody wants to make the first move.
Nobody wants to blink.
Well, no. And there's a way out of that. What you do is both sides make a simultaneous announcement that the leaders have talked and there's going to be a meeting without saying who called whom, and who set it up. So there's a way around it. But, my assessment is I think the Americans are more anxious for a deal than the Chinese. The Chinese don't have quite the same political situation that we have. They can afford to wait longer politically than we can. They have I think, more serious economic problems than we do. Although,
I want to ask Phil about that really quick, because what kind of pain is this going to cause the Chinese? They're heavily dependent on exports.
Absolutely. I mean, so this is going to be, to Bill's point, I think their political situation makes it, easier for them to sort of weather things. But economically, they were already facing really high headwinds, right? Domestic demand has really faltered. They have incredibly high youth unemployment. They really, in the face of their sort of property market collapse, which is, kind of ongoing, they were, faced with a decision of sort of rebalancing towards consumption or rebalancing towards, continuing to double down on their export-led model. Consumption had a few problems. One, Xi really doesn't like sort of a direct stimulus approach. And two, it's really hard to do that when you're basically going through essentially the makings of a balance sheet recession where everybody's assets are going through the floor, so nobody wants to spend. So they have a really tough economic situation, and they really do rely on exports, huge amount of exports.
Yes.
And so,
particularly in the United States.
And I predict the loser here is going to be Europe, because all that production has to go somewhere. And if it's not going to the United States, where's it going to go? Other developed countries. So think Europe.
And explain why Europe loses in that, Bill.
Because the Chinese are going to dump all their production there,
right,
instead of here, and the Europeans, I think, are getting ready for that. So,
there's going to be a giant European version of Walmart selling all this stuff that we're used to getting for really cheap.
Well, Europe is already deindustrializing at the moment. Germany is contracting, so there are tough economic times in Europe, and because of high production costs driven by high energy costs. Europe is less well positioned to fend this off. But I think Bill's right. A lot of these exports, if they don't find a home, there's no home for these products within the Chinese domestic market. Their consumer segment is too small. They really need exports to somewhere. And if it's not here, Bill's right. It's probably the logical place.
There is one good impact of Europe being the loser here, Bill, because if they start wearing all the kind of crappy clothes we do, they're going to look like the schlubs of the world, and we'll look a lot nicer as, this happens. Because
less to be snobbish about.
Well,
they'll find something.
Speak for yourself, Andrew, when it comes to schlubism.
Bill, I am the one with the very expensive suit on right now. Our listeners can't see that, but I
am. I'm going to be talking shortly to a reporter for a fashion magazine, so we're going to have a discussion about.
I know that you are
about high-end apparel.
Well, let me ask you guys this. So, Wall Street Journal has an editorial today. It says, and I want to quote them: "Never bet against America," it said, "and normally global investors don't want to. It's a sign of the magnitude of Mr. Trump's tariff mistake that he's goading them into doing so. He needs a policy reversal, not a pause." Thoughts?
I couldn't agree more. I don't think we're going to get it. But the joke has been made several times already, but this is our Liz Truss moment, right? Like, we just put out just an insane policy and the market responded, right? No, there's just no way in which this policy is anywhere close to going to be able to achieve the aims that he wants. As Bill stated, if you're looking for revenue, this isn't the way to do it. If you're looking for reindustrialization, this isn't the way to do it. If you're looking for leverage for non-tariff aims, also not the way to do it. And by the way, it's going to be, probably put the global economy into a recession. So when you show that level of unseriousness, markets are going to be forced to respond.
And as Larry Summers has said, and as Lael Brainerd, it says, both Democrats, but they said it, this is a self-induced recession. Self-induced.
It's an own goal. It's an own goal. That was my column this week.
Own goal. All right. So, but let me ask you guys finally in the end here, like, what lasting damage has already been done? And what can we expect from that lasting damage?
Destruction of trust. He's offended numerous world leaders. He's insulted numerous countries, Canada being the best example. And, if it were just our enemies, you could understand it. But he's gone after our friends and our allies. And trust is a very difficult thing to recover. You can get rid of the tariffs, but you can't restore trust just by changing your policy. That's why I think what happened yesterday is going to turn out to make things worse, not better. It demonstrates the capriciousness of the policy, and it doesn't win him any friends, because it's what Phil said. How do you know that, next week or next month, he's not going to change his mind again? And when the trust is broken, I think Scott alluded to this last week, when the trust is broken, it's very difficult to rebuild it.
Yeah, totally.
Well, I think he's going to stand pat. I think he's going to stick with what where he is now. I think he wants to see this through. That's why he stayed active in politics. That he is this great comeback story, right? And sheer will and force of personality is a piece of what he is as a leader. I just don't see him changing. He'll modify, he'll improvise, he'll riff, he'll be flexible at the end. That's read his book. That's the way he operates.
But you know what else it said in his book is that once he's anchored in, he doesn't budge. And yesterday he budged, and we're seeing this now.
Yes, right. Well, he was given things some room. All right. I mean, this guy loves to let people negotiate with themselves. All right. This is the part that Washington is not accustomed to seeing. All right. And actually, political leaders are very seldom like this.
But isn't that what he just did? Didn't he just negotiate with himself?
He hasn't concluded anything. So he allowed for a little room, and so now he has all these proposals, and so I think he's going to let this thing play out. But to my mind, Andrew, this may be a complete disaster. I don't know.
Well, you know what somebody said to me the other day, Scott? Someone said this is President Trump's Obamacare. He's come in, and this is the thing he's obsessed with, and he's going to play it out to the end. Damn the political costs. Certainly Obama and the Democrats felt that way about universal health care. Do you guys agree with that analogy?
Yeah, I completely agree with Scott that listen, if he's definitely not pulling the rug out from under us. He's been talking about doing policies like this the entire campaign, so I mean, we can't say we didn't vote for this as a country. That said, there's the wanting something to happen, and that there's the having the tools to actually make it happen. We don't have the tools to make it happen. The aggregate trade deficit is not something you can solve with tariff policy. It's a function of our fiscal deficit. So, try as he might, he's not going to solve the problem he's trying to solve if he cares about these deficits. But no, I agree.
I just say, one thing I think that is fairly predictable is how these negotiations are going to play out. And I take my cues from the Canada-Mexico episode. This is a guy for whom the act of winning is more important than what he wins. What he really wants is to be able to stand up and say, they folded, I win. And for him, I was just talking to somebody else about this the other day, that for him, these things are all zero sum. He doesn't win unless somebody loses. And he wants to be in the position of saying, I win, you lose. What exactly it is that he won is of secondary importance. Look at the China agreement in Trump 1.0, where he came in with big demands, and the upshot was they promised to buy a bunch of stuff, which they didn't do anyway. And he was asked at the big press conference for the second greatest deal that was ever negotiated, USMCA having been the greatest one. What about all that stuff you wanted? And the answer was, well, that's phase two. And of course, then people forgot about phase two. So I think you're going to see people employing the shine bomb strategy, which is make modest concessions, let him declare victory, and then don't contradict him and move on. So, Navarro is busy telling everybody just going to zero tariffs isn't good enough. You got to do more than that. I'd say wait and see on that. I think countries are going to come in and make offers that will not be insignificant, will not be as much as Navarro wants. And I'll bet you he takes a lot of them, and then each time has a press conference and declares victory.
And so if he does that and we get victory after victory, does our economy recover from it? Or is this still a
because
disaster?
there's less harm. There's less harm done by permanently high tariffs. This is actually a way out of this, the bills just described. And so if it happens, and it certainly happened in the first term, with taking a small part of the package and calling it the whole, that would reduce the harm associated with high tariffs for long periods of time. The other thing I want to agree with Bill, and the thing that worries me about him is he's from a win-lose business. In real estate, you're either the successful bidder for Rockefeller Center or you're not. Okay? It is a win-lose business. And trade is not. Trade's a win-win business. And I think it throws off his instincts. His instincts are all about how do I win? And in trade, it's often about how do we both win?
Yeah, how does everybody win?
You're right. Exactly. I agree completely.
Yeah, and so that's the one part of history that doesn't mesh. Ultimately, I don't think it matters. I think he charges ahead. Okay, he's here to do this. We're just here for entertainment.
Phil, you're the newest trade guy. Yeah, right. Phil, you are the newest trade guy. I'm going to give you the last word here.
Oh man, I don't know if I can do better than what Scott just said. No, I agree completely. Look, there's a way out of this. There certainly is a way out. USTR, even before April 2nd, was talking about, sectoral trade agreements, other types of trade agreements, even discussion around sort of like customs unions types, moving towards a customs union in the Americas. I mean, there are ways out of this that will leave us in a better place in terms of actual tariff rates than where we started. That said, to Bill's point, there's going to be a huge amount of trust lost, even if we have lower tariff rates on the other side of this. I think the biggest way to solve that, or move towards solving that, is there's got to be some sort of reform of presidential authorities around IEPA and other things, right? We can't have the norms around, establishing emergencies just completely crumble and not have any sort of new guardrails put up. That seems like some way in which we could potentially get a little bit of trust back. But let's not foreclose the possibility of going to a good outcome. But I can't say I'm betting on it right now.
Yeah, I don't think anybody's betting on it right now. Maybe Scott's betting on it. He's got patience. He's got strategic patience. He's playing the long game. I want to be optimistic and go with what you're saying, Scott, but it sure doesn't feel so optimistic today. So and into the next couple weeks or so, maybe a lot longer.
We'll see how it plays out.
Yeah, we'll see, guys. As always, this is fascinating discussion. I know we're going to be back early next week because, boy, when you talk about Whiplash, this
stuff keeps happening. It keeps happening.
We'll be back. Thanks, y'all.
Thanks.
Thank you.
To our listeners, if you have a question for the Trade Guys, write us at tradeguys@csis.org. That's tradeguys@csis.org. We'll read some of your emails and have the Trade Guys react to it. You've been listening to The Trade Guys, a CSIS podcast.